So today's topic, I know with the invitation link, you've already had a look at what we are about to discuss today. We're going to discuss some popular trading indicators or popular chart indicators. Well, before we even go into today's topic, I would like to say I really like to show the practical aspects more than the theoretical aspects. That's why I'm sharing my screen. So from time to time, we'll be going into the trading screen, and whatever I talk about here, I'll also demonstrate it for you on the trading screen so that you know how to use these um, indicators as well. I'm not just going to say or talk about this and just roll over without showing you how it looks like, because I mean, in trading, you need more texting, more practical for you to understand the strategy or indicator or whatever you are using best. With mere saying and theory can't really make you understand and trade well. So I think this approach is going to help a lot in this session. So trading indicators. What are even trading indicators? Trading indicators are mathematical calculations that can be applied to a price or a volume. So if I talk about mathematical calculations, most of the time when people hear maths, they tend to run away because a lot of people don't really like maths. Well, I, for instance, I don't really like a lot of maths. But then, if you talk about mathematical calculations here, we are not saying we are going to do those mathematical calculations. That's why we have indicators. The indicators have already been programmed, or there is an algorithm behind it that helps it to calculate the price and the volume of the charts very well for you. So you can just select any indicator and you see it doing its work for you without any hassle. So some people says indicators are like prophets, right? They are like prophets because some indicators looks into the future and tell you what could potentially happen in the next candlestick or in the next day or whatever time frame you are using. So here we're going to look at the functions of indicators because they have numerous functions. So what are some functions? They alert traders about specific conditions met in the market. So let's say you're a trader, you're using a certain strategy, a certain approach, or a certain plan to trade. Now you see a setup, all right? You see a setup, and you are waiting for the setup to, trigger. So what could help you to, see whether the setup is confirmed or not? You can use this indicator to do that. So indicators can show you whether a certain condition is being met in the market. So that's a condition you are waiting for it to be met in the market. It can take you days, hours, or even minutes. So at that point in time, the indicator can show you that the time is up. What you were waiting for, this is the time for you to place your trade. So it's one function of indicators. And also they predict the direction of the market. Some indicators can tell you this market is on an uptrend. That's what some indicators tell you. Some indicators tell you the market is on a downtrend or the market is on the sideways trend. So if you are placing trades, you have to be cautious and place your trade based on where the trend is going. And also the third one is it confirms your analysis and suggests the current price action or by another technical indicator. So most of the time, some people use two indicators, three indicators, and often I also see people using five indicators and more indicators on their charts. Well, I like to advise people I train or people who I mentor that it's not about how many indicators you use, because most of the time, if you put a lot of indicators on your charts, it can really, harm you in your trades, and you can even lose a lot of money because this indicator will be telling you this one will be countering, what this indicator is saying, and now you are confused and you might end up placing a wrong trade. So I usually recommend that about two to three indicators should be your max. Number of indicators you use in your trades. So you don't need a lot of indicators to make good trades in the market. So confirming your analysis. So you've made your analysis, and now you want to confirm it. Well, you are using one indicator. This indicator is telling you that the price is on an uptrend. Okay, it's on an uptrend, but it's on an uptrend doesn't mean you can just place a buy trade. Okay, so these indicators, you can put a second indicator that can tell you, or that can show you, the entry price or the level you should place your trade. So we have this indicator that's telling you the market is on an uptrend, and the second indicator is also giving you a confirmation that this is the time you can place your trade and make some profit, because the market can't, just reverse at that moment. So it's just a confirmation. So these are some things that technical indicators, do in the market, and it's really helpful. I urge every trader to be using indicators, because it really helps you to place or to make good decisions in the market. So there are some things you have to have in mind before you use these indicators. What you need to know is that we have two types of indicators. We have two types of indicators. The first one is called the leading indicator, and the second one is called the lagging indicator. So just as I said previously, some people call this indicators profits. So those are the leading indicators. Example, the MACD or the RSI or the stochastic. Those are leading indicators. What it does is that they look into the future, right? If they are on your chart, they look into your future and see what could potentially happen in the next candlestick, the next day, the next hour or so. So that they give you a prior knowledge or information about what you should look out for to happen in the market. So those are MACD, RSI, and stochastic and other indicators. We also have the lagging indicators. Those lagging indicators don't really look into the future, but it moves along with the price. Okay, the lagging indicator moves along with the price. So an example of a lagging indicator can be the moving average, or the MA. It's also a lagging indicator. We also have other ones like the Awesome oscillator. It's also a lagging indicator. We have the fractal. It's also a lagging indicator. We even have a lot more that are also lagging indicators. So just a second, we are going to go to the chart, and you'll see these examples about the leading and the lagging indicators and how they work as well with your charts. Okay. So the first indicator today we're going to discuss is the RSI. The RSI is the first indicator we're going to discuss today. So what is even RSI? What's RSI? The full meaning or the full name of RSI is Relative Strength Index. Relative Strength Index. So as the name goes, it calculates or it measures the strength or the weakness of the currency they are trading. So if the currency, is trading on an uptrend or is going towards the upward direction, it goes up, goes up, goes up, and it loses its momentum or it loses its strength that is pushing it towards the upward direction. So the RSI makes you know that at this point, the currency pair, whether it's GBP, USD, USD, JPY, or gold, or whatever currency you are trading, or whatever index you are trading, it gives you a knowledge, or it makes you understand that at this point it is overbought. A lot of people have bought the currency pair, and now it's overbought. So at this point in time, the currency can reverse and go towards the opposite direction. So it's a very important indicator in the market. So RSI is one of the most important indicators in the market. So it makes you know whether the currency pair has lost its strength or has lost its momentum. So let's go into the charts and see how the RSI works. All right, so this platform we have here is called the Trading View. Every week I talk about it. Trading View. The Trading View is just a universal trading screen or trading charts. You can just go to tradingview.com and create an account with them. It's not a broker, but it's just a platform that you can do your analysis over there. I like using TradingView a lot because of, its features. It has a lot of, tools you can use to make your analysis. So I use this a lot when I'm doing my analysis. After, getting what I want, I just go to my MT4 or my MT5 screen and place my trade. So this is a TradingView application. It's a web app. So you just go to indicators and strategies, and you look for RSI. You just type RSI. So there you go. That's the relative strength index. You just click on it, and you have the RSI down here. You see how the RSI looks like. So the RSI has two figures. So we can go into the settings of the RSI and see how this RSI works. It has something called the upper band and the lower band. So the figure or the settings for the upper band is 70, and the lower band is 30. That's on default, and that's what we are going to use as well. So on default, the upper band is 70 and the lower band is 30. So I think that's the right, um, figures you can use for the RSI. So over here, you can see this portion has been shaded. So this is the upper band and this is the lower band. Okay, so let me just zoom in and you see how excellent the RSI works in the charts. So I said RSI makes you know whether the price of or the currency you're trading is overbought or oversold. So here let's have a practical here, and let's see how it works. So right here, you can see that the price has cut through the faded portion towards the upwards direction. So it has cut through the 70 upper band. And now it is telling you that the currency price of GBP USD is overbought. It has lost its strength or its momentum towards the upwards direction. And at any point in time, the price can go down. And we are saying the RSI is a leading indicator. So it's leading you and telling you that the price is overbought, and at any point in time, they're expecting a downward movement. In the charts. So that's it for RSI. So you see over here, since the RSI, is overbought, you can see that the price just went toward the downward direction over here, because it was telling you that at any point in time, the price can be sold. So you see over here, the price came towards the downward direction and the price sold, right? So let's just proceed and see whether we're going to see any overbought condition in the charts. So right here, the price was within the zone. It was just within the zone. And at this point, that's, the past 3 days. For the past 3 days on GBP USD pair, the price has been overbought again. You see, right here, it has cut through the 70 upper band region. And now it's telling you the price is overbought. And you see today's candlestick, we are on the daily chart. So today's candlestick, you see the price is coming towards the downward direction. You see it's a bearish candlestick today. So tomorrow, the price could potentially continue its downward movement because the price is overbought and it has to, go to correction. There has to be correction in the price. So it can come around and roam about this zone. And if it goes towards the 30 lower band, it means it's oversold. And now you'll be expecting the price to be, to go towards the upward direction again. So you see how simple the RSI can be interpreted. It makes you know whether the currency pair has lost its strength of momentum or is gaining a lot of momentum. So that's it. So any question about the RSI, you can let me know in the chat section, and I'll be so glad to explain further as well. So that's it for the RSI. So you see on the fourth, it already has its figures at 70 upper band and 30 lower band. And I think um, that's the settings most traders use when they are trading with the RSI. Okay, so let's go to the next indicator. The next indicator we're going to talk about today is the MACD. MACD. Some other people say it's MACD, but I like to call it the MACD. That's what you hear most traders. Yes. So Bello, when you're using the RSI, you are focusing on the upper band and the lower band, right? That's the main focus. So if the price crosses the upper band, you can see it's overbought, and you should be expecting a sell anytime soon. And when the price, oversells, you should be expecting an upper movement soon in the market. So I think it's pretty clear for the explanation of the RSI. So the next one is the MACD. The MACD is the acronym of Moving Average Convergence Divergence. So if you see MA in the market, it means moving average. And we have a lot of moving averages in the market. We have moving average exponential, moving average convergence, divergence. We only have moving average as well, and a lot of moving averages in the market. Traders also like using the MACD a lot in the market. What does the MACD do? Well, some traders, it's really difficult for them to identify the trend of the market, whether the trend is an uptrend or a downtrend. In our previous webinars, we learned how to identify trends in the market, how to draw trend lines and stuff. Some traders also like to use indicators to see the general overview of the market, whether it's an uptrend or a downtrend. There's going to be a reversal in the market or not. So the MACD is a perfect indicator that can help you to do, or to achieve that task. So every indicator has what it does, and this is the purpose of the MACD. Let's see how the MACD also looks like. So it uses two moving averages, the slow moving average and the fast moving average. So let's go into the chart once again and see how the MACD also works. So let me just remove the RSI and look for type MACD. There you go. So that's it. So you see we have a lot of MACDs over here, but these are not what we are looking for. We are looking for the main one, the inbuilt MACD, that's the MACD. So you just click it. There you go. So this is the MACD in our charts. This is how it looks like. So this is how it looks like. Okay. So how does this MACD also works? How does it work? I said it's used to identify the trend in the markets. And it's also used to identify whether there's going to be a reversal in the market as well. So we can do these two things in the market. So as I already said, we have, let's go into the settings of the MACD and also see the inputs. So I said we have the fast, moving average, that's set to 12. We have the slow moving average, that's set to 26. So when I'm using this type of indicators, I don't mess with the default settings. I just use the default settings as it is. So we'll go to OK. Okay, so you can see that the blue one or the light blue one is the fast moving average, and the yellow one or the orange one is the slow moving average. Okay, so last week I think Bello asked the same question about the when we're using the EMA, learn about the scalping strategies. Here we are not using the EMA, we are using other indicators to see the trend of the market. So here you can see that the fast EMA, whenever the fast EMA crosses towards the upwards direction and has the slow EMA below it, you can see that it's an uptrend. You see that it's an uptrend. So at any point in time when you are using the MACD, you should be focused on the cross. At any point in time that the two moving averages, whether the fast moving average or the slow moving averages, whenever they cross, you should focus right there and know that there can be a change of trend. The trend can be changing over there. So right here, the trend was going towards a sideways direction. It wasn't a serious trend. And you can see all of a sudden the price crossed here again. So you can see that the fast moving average cut through the slow moving average. Then that means that the price is, going towards the upward direction. It's an uptrend. An uptrend has been established over here. Let's try to go into the chat and see whether they're going to identify a downtrend as well. So right here, you can see that the fast moving average has cut towards the downward direction. So the fast moving average is down and the slow moving average is on top of it. Then that means that the price is on a downtrend. You can see what happened in the chart over here as well. You can see it was a downtrend until there was another cross over here that suggested another uptrend over here. So when using the MACD, you have to also focus on the crosses. However, the cross, you have to pay critical attention to that because it could be a beginning of an uptrend or a reversal, or a beginning of a downtrend or a reversal. So guys, let me know your questions or any concerns when you have. So can day traders use the MACD? Yes. Whether you are a day trader, you are a swing trader, whatever kind of trader you are, you can be using the MACD to identify um, your trends. Even scalpers sometimes use the MACD because scalpers are trading on a smaller time frames. They don't really look into the big picture of the market because they are not in position for a very long time. So most of them just disregard the use of the MACD. So most of the time you see day traders and swing traders using the MACD because they want to see the overall view of where the market is going. They want to see the overall trend of where the market is going, and then they can place trade and relax and take a lot of profits in the market. So any trader can use this indicator, but mostly it's being used by day traders and swing traders as well. So the next indicator we're going to talk about is the most simple, indicator we have in this session. And people also call it the most simple to use indicator in the Forex market or in the trading industry. So yes, Bello, you should focus on the crosses. When you are using the MACD, the crosses are where your focus should be. So if you are placing, you are trading and the trend is an uptrend, you are placing buy trades. Whenever the price hits your downline on an uptrend, you are placing buy trades, and you're making profits. So at any point in time you see there is a cross, you should be careful and see that the trend might be changing or there could be a reversal in the trend. So that's why you have to be cautious and know that the trend is about to change or something is about to happen in the market. In the meantime, I'll be going to the next indicator we have. So if you have any other question, I'll be reviewing it for you and be answering it for you as well. So Parabolic SAR, I would say is the first indicator I used in the market, or the first indicator I really understood how it works in the market. Parabolic SAR. I like how simple it looks and how I like how simple it works. I like how effective it works in the market as well. So Parabolic SAR. I think I just fell in love with the name first, and then I put it on my screen, my chat, and that's where it gave me the I mean the excitement to learn more about it, and I really got to master the use of this Parabolic SAR. So let's go into the chat and look at how this Parabolic SAR is. But before we go into the chat, let's also know what the Parabolic SAR does before we go there. What it does is that it also, help you to see whether there is a reversal or there is about to be a reversal in the market. And it also helps you to know whether a trend is starting. In a way, it also works as the MACD, all right? Because the MACD also helps you to know whether a trend is starting or there's going to be a reversal. And the parabolic also does a very good work with that as well. So the nice thing about parabolic SAR is that it's very simple to use. It's one of the simple indicators in the markets. And when I say simple, it's really simple for you to understand it as well. So let me just remove my view from the charts and go and look for our parabolic. Okay, so parabolic SAR strategy and parabolic SAR. So we're going to go for this. There you go. So you see these small dots on top and at the bottom of our charts or our candlesticks. So let's go into the settings of the parabolic. For this dots, I don't really see it very well. Let me go and make it more bold. All right, for you to also see it very well as well. And we can also even change the color, right, to red, yellow, green. But let me just keep the color to, okay, this color is open out right, and you can also see it. So the settings is going to be on default, and this is how the parabolic also looks like. So you see dot on top and at the downside of our parabolic or our charts. So how does it work? So we can start from over here and work our way all the way towards the upwards direction. So we say the parabolic helps us to know whether there's going to be a reversal or a beginning of a trend. So right here, you can see that the trend was a downtrend. You can see how the market had a steep slope over here. You see, even at this point, the price tried to, pull up a little bit, but the parabolic did not respond to it because the downward steep was so, had a lot of strength. And because of that, when it even tried to go towards the upward direction, the parabolic did not respond to it. So the parabolic really knows what it's doing. It has done its calculation and it's seeing that this pull up can't be, a reversal or anything. So the parabolic still insisted and had its point over here. So what you need to know about the parabolic is that at any point that you have the parabolic dot on top of the candlestick, it means that it's pushing the price down, or it means that the price is going down. And whenever you see the parabolic below the candlestick, it means it is pushing the price towards the upwards direction. So that's, the simple, thing you need to know about parabolic. So you see right here, the parabolic stopped over here. It stopped over here, and a new parabolic started down here. It means that at this point in time, the parabolic has seen that the chart can reverse, or there's been a reversal towards the upward direction. So this is where the parabolic started showing its, dots down here, pushing the price towards the upward direction. Right here, there was a resistance, and now the parabolic, tried to push the price down a little bit, but still, the overall trend was an upward trend. So we see at any point in time that the price, tries to go towards the parabolic is down, the price will be pushing towards the upwards direction. So let's go into today's charts. So we are on the GBP USD. The GBP USD. Today, this could be a reversal. This could be a reversal, and tomorrow it could be a continuous, movement towards the downwards direction. So tomorrow, what I'll be expecting when using the parabolic SAR is to see a dot right on top over here. Right now, the parabolic is down, is below, the charts, or is below the candlestick. But if we really need to confirm, place a sell trade, then I'll be expecting to see a parabolic on top over here tomorrow. So a parabolic should be on top here tomorrow, suggesting that the price or there's been a reversal in the markets. Okay, so that's what I'll be expecting tomorrow. And it could be that the parabolic can also continuously, moving toward the downward the downside, right? That would mean that it could also push the price upward again. But for what I'm seeing over here, it looks like it's been a reversal. It looks like there is a resistance over here, and now this this one could be a reversal candlestick. But we need a confirmation to be able to confirm whether it's really a reversal. So you see over here, the price hits and pullbacks, it hits pullbacks, hits pullbacks, and this could be another pullback. So this points to hit the downtrend line. And when it's hit the downtrend line and breaks, then we can really confirm that the trend has changed. And that's where the MACD is also going to come in place to also confirm whether the trend has changed toward a downward direction. But today, tomorrow, when we see a parabolic setting on top over here, then it will tell us that for tomorrow, the whole day, the price can go towards the downward direction. Okay, so let's look at our calendar. So tomorrow is 26th, and tomorrow is the last Friday of the month. So for the last Friday of the month, what I need to tell you, traders, is that it can be very risky to trade on last Fridays of the month because there's something called the NFP. That's a non-farm payroll. Those data can be released on the last, Friday of the month, and it can be very risky. Okay, so as we are trying to predict that the market is going to have a bearish continuation tomorrow, when the NFP figure sets in, the price can react abnormally and can even see a very long candlestick toward the upwards direction. And if you place a sell trade, you can lose all your money or you can blow your trading account. But for what I'm seeing here, without the NFP figures, giving any abnormal reaction in the market could have a bearish continuation tomorrow with the GBP USD currency pair. Guys, for the parabolic SAR, if there is any question, you can also ask your question as well, and I'll be glad to answer. Every Thursday, 8 p.m., you can join us here and let us learn more about the forex markets. And this webinar could really speed up your learning process in the market. So be sure to join this webinar each and every Thursday, 8 p.m. You can find the link to register for this webinar on the platform or the Instagram page of M Trading. So if you go to M Trading, the Instagram page, you can see the link for this webinar over there. And also, if you are in my Telegram channel, I also post the link there every Thursday morning so that I can register in advance and join this webinar for us to learn a lot about the forex market. And also, if you want to have or watch a lot of forex related content, you can also go to my YouTube channel. That's Bank Lifestyle. I have a lot of videos about forex trading, advice about forex trading, my journey, and a lot of things um, you need to know in your forex journey as well. I post a lot of helpful stuff on my YouTube channel as well. So Jonah is asking, in using all these indicators, what's the best time frame for utilizing each of them? So there is nothing like best time frame for utilizing them. All indicators can work on all time frames. It depends on what you are trying to achieve on the charts. But I could say some work best on some time frames. For the parabolic, for instance, it can be also used for scalpers. So if you're even using the 5 minute time frame, the 5 minute time frame, you can see scalpers can also use this parabolic and see that at this point in time the price is going towards the downward direction. So within these few minutes that I need a quick my quick gains, I can just um, play some sell trades and make some quick cash on this downward movement. So parabolic can be also used for scalpers and on short time frames. But when we are using the moving averages like the MACD, the RSI and stuff, most of the time they are used by day traders and swing traders to see the overall direction or trend of the market. It can be used on the 4-hour charts, the 1-hour charts, and even on the daily charts to see the big picture of the market. So this parabolic SAR is an indicator that as I said, I use first in the market. At that point in time, I was trading options. That was binary options. Binary options like IQ options, expect options, and stuff. Those ones are not Forex, they're options. That's the place I started using the parabolic SAR for placing option trades. It helped me a lot, but at the end of the day, I end up losing all my winning trades. And I thought those options, that IQ option, expert option, and stuff, I thought they were being manipulated. I still think they are being manipulated. Maybe someone can convince me they are not. So that's what made me stop using those option platforms and switch to Forex. And Forex has been the best option for me so far. And the parabolic works, excellent when you are trading Forex with it. Let me see if I have any other question. All right, Jonah, your question has been answered. So George is asking, which one is the AO indicator? The AO is the awesome oscillator. The awesome oscillator, that's one other indicator I use, almost every day when I'm trading. AO, that's awesome oscillator. So this is the awesome oscillator. The awesome oscillator, you can see this red, and this green bars on the screen. This is the awesome oscillator. I would love to talk about the awesome oscillator, but I don't think it could be today. But the general knowledge of the awesome oscillator is showing you, the volume of the currency you're trading. So right now, I don't know whether on your screen you can see it very clearly. Let me go to the settings and try to make the bars a little bit bigger. Okay, I'm trying to make the bars bigger so that I can see it well. All right, so I'm sure it's clear now. So this is the awesome oscillator. So whenever you are seeing these red bars towards the downward direction, it's telling you that the price has, momentum towards the downward direction. And whenever you see this green, let me show you a trick with this GBP/USD, this awesome oscillator. And it really works about, I could say 80% of the time. It really works best for me when I'm trading. Let's go to the daily charts. And this could even help us to predict what could happen in the market tomorrow. So right now over here, you can see it was an uptrend and the awesome oscillator started going towards the upwards direction over here. You can see this green, this red awesome oscillator bar that was trying to tell you that on this day, the price was about to reverse all the downwards direction. But the next day, it was another green pair, green stick. That means that, the momentum has, it has gained momentum again. So whenever you see a red bar in the midst of green bars, and the red bar couldn't continue, when the next green bar comes, it means that it has gained more strength or more momentum. And that means that the price can, go up or continuously go up very strongly. So you see how it went up to this point. And today you can see that it is a red candlestick that is showing a reversal, a potential reversal in the trend. And at this candlestick over here, so you can see that it is green. Okay, so tomorrow, when it continues, when the red or the bearish movement continues and it turns on the red bar, then that means that the price can be confirmed to be, a downtrend, or it can, sell during the day or the whole day. It can be a bearish candlestick. So tomorrow we are expecting the awesome oscillator to turn red. When it turns red, then 80% of the time you see that the price for the day is going to be bearish. I don't know whether that is understandable, but I think that's just a quick overview of how the awesome oscillator works. So the difference between the fast moving average, the figure for the fast moving average is small, and the figure for the slow moving average is, is a big figure. So the fast moving average is, it's more closer to the chart, or it's more closer to the candlestick. And the slow moving average is, more apart from the candlesticks. All right. So the slow moving average is showing you the big picture of how the market is going to react. And the slow moving average is showing you in the meantime, or in that particular time, what could happen in the market. So the slow moving average is predicting what could happen in the market within a very shorter time frame. And the big moving average is showing you the big picture, what's going to happen in, on a bigger time frame, or a bigger, picture. I don't know whether that is also very clear. That's about the long moving average, or the fast moving average, and the slow moving average as well. So the slow moving average is showing you the immediate response of, the candlestick, and the slow moving average is also showing you, what could happen on the bigger, picture of the chart as well. So you see that when you are trading, the slow moving average reacts very slowly. The curve in the slow moving average are very, very, light. But for the fast moving average, you can see that it just moves along with the candlestick, and it has a lot of zigzag in the market. So it reacts more faster than the slow moving average. And with the instance of the MACD, when it crosses, it means that because the slow moving average is down and the fast moving average crosses towards the upward direction, it means that very soon the price can, go towards the upward direction. And when the fast moving average crosses towards the downward direction, it means that very soon the price can go towards the downward direction. So whoever asked that question, let me know whether that is also clear for you, Ezra. So all of these indicators, which one is the accurate one to use, or which one is the accurate one I recommend? Well, it depends on what I'm trying to achieve in the market. Every indicator has its use, right? So if I'm trying to see whether there's going to be a reversal, I know what indicator that does that work. So I just go and use it. If I want to see the trend, I know what indicator that does that work. It depends on what you're trying to achieve in the market. So when I'm using, most of the time, as I said, I like using the outcome oscillator, right? That helps me to predict where the market is going, parts is gaining momentum and losing momentum, and also it also helps me to predict a reversal in the market. And I also like to use the RSI as well for to see the general, picture, whether the price is being overbought or oversold in the market. So guys, you can't be using just the exact um, strategy or the exact indicators I'm using. That's why we have something called the back testing. After I've just had this webinar, you can't just go and be using RSI MACD on your live trading account. You have to test these indicators and see what works best for you, and now you can put them on your chart as well. All right, guys, at this point in time, thanks a lot for joining this webinar today. If there's any other question that pops up in mind, you can find me on Instagram or Telegram at Bank Lifestyle, and I'll be glad to answer your question and help you a lot in whatever you are trying to achieve in the market. Guys, I'll be so happy to be part of your success stories in the Forex market. So be free, don't hesitate to hit me up if there's anything you need to understand or clarify in the market. Thanks a lot for joining this webinar today. Next week, same time, we meet again. Bye bye.